Matthew, I'll start with you. Tell us more about this new fund and how it works.
Sure. So the goal with the new fund was really to provide qualified purchasers an opportunity to invest in a diversified, expertly constructed thematic index of crypto tokens, 40 specifically, that are consistent with the metaverse theme. Our goal was to take a look at the entire ecosystem, focus on bona fide, liquidity, tested, stress-tested securities, and to provide yet another diversified access path to a multi-trillion-dollar investment opportunity.
So, Matt, the fund is only open to qualified purchasers. How do you identify those?
Sure. Great question, Emily. Qualified purchasers are individuals in the U.S. that have 5 million or more in liquid assets. So this is one corner of the market. A big story about crypto is it's often cracked open the market in these areas before it's expanded. The metaverse is obviously a very exciting and very early opportunity, and that's why it's most appropriate for this qualified purchaser market. Eventually, we'd love to open it up more broadly, but that's where we are today.
Now, Matthew, your Metaverse ETF, which we've talked a lot about, is down almost 40% so far this year. Yes, so much of the market is down, but why should investors think that this ETF is the right call?
Well, I think the perspective on the METV ETF is it's about 39% down year to date. That compares to about 29 or 30% for the triple Qs, a reflection of the fact that we are over-indexed to growth companies, commensurate with the expectation that over the coming decade, Goldman Sachs, Citi, Morgan Stanley estimate that between 8 and 13 trillion in annual GDP will come from this sector. That's 40% of the digital economy's growth and 15% of the world economy. Over-indexing to growth is often a good play. Year to date, it has proven not to be. As relates to this specific product, I see it as yet another asset class that, to many, ourselves included, believe is essential. I'm an early stage and late stage private investor. The ETF is designed for public markets exposure, and this product is designed for the cryptocurrency and blockchain environment.
So this is really a bet you see on the future. Matt, how do you see this fund evolving, let's say 5 years from now?
Oh, I think it's going to be a very big deal. If you talk about the metaverse and you don't look 1 year out or 2 years out, but 5 years or 10 years out, I think a lot of people feel confident that our immersion in the digital world is going to increase. And that's going to mean that these assets, which are really the core infrastructure on which an open metaverse will be built, should grow, should become common names, and we should get more and more assets in the fund. So we're very early in this opportunity. I suspect 5 years from now, this will be, as Matt said, a much larger asset class. These assets will be much more familiar, but investors do have the opportunity to access them today. They're able to get in early on this decade-long megatrend.
So I would love to get your thoughts, Matt, on the crypto winter that just seems to be ongoing and colder on some days than others. Bitcoin can't seem to break out of this $30,000 route. Where is this going? How long does it last?
Yeah, I think what we've seen is a macro-induced crypto winter. We've seen a rewriting of all growth investments, and that includes crypto. If you look under the hood, the sort of fundamentals of crypto continue to be strong. Venture capital activity is strong. Developer activity is strong. New projects and launches are strong. Companies like Coinbase are doing interesting things. So underneath the surface, all this great activity is going on. We need the macro markets to normalize, and then you'll see the impact of that fundamental progress. I suspect we still have a few months to go before those macro markets normalize, but once they do, at least historically, what you've seen is crypto rebound aggressively because the underlying trends are just so positive, and that continues to be true in this market.
Matthew, it can be hard for investors to believe in this view of the future, whether it is crypto or the metaverse. The Queen Jubilee was this week. We saw a hologram of the Queen in a carriage. You tweeted about it. How do you see this as an indication of where the metaverse and some of these future technologies are headed? The monarchy-verse, as you say.
I think the most important thing is to recognize that the advent of graphics-based computing, using 3D simulation to solve problems that previously were outside of our reach, while also recognizing that younger generations in particular, I grew up using text. My identity was reflected by an email address and a message board username, slowly grew into more and more multimedia, more live experiences. And now we see through Roblox, Minecraft, and others an entire new generation, Gen Z, that is reflecting themselves through 3D objects, 3D avatars, existing in 3D space. The confluence of graphics-based computing on the industrial side, mixed with societal and behavioral changes among younger demographics, bolstered by new technological paradigms such as blockchain and imminent XR hardware, gives me confidence in what's around the corner. Holograms and holography, a field that we previously believed was just for Star Trek and the Jetsons, is actually imminent. We're going to see it deployed globally in retail stores over the coming years.